What's good, YouTube? And it's your girl Bofina1 bringing you guys another YouTube video. And as you guys can see here, we have this is actually one of the topics that I talked about on my podcast the other day. Shameless plug. If you haven't already, go check out my podcast that recently I kind of like restarted it, whatnot, called Bofina1 Podcast. And as you guys can see here, this is one of the topics that we talked about. Mortgage rates enter the red zone. Home buyers find they can't quite bully sellers hard enough to compensate. So for those who don't know, the housing market is literally like crazy right now. Like it's like the highest it's ever been for interest rates. Home prices are the highest they've been in a long time. And it's to the point where interest rates are getting so high that people it's getting to a point where they can't buy. So they're just saying, okay, well, we're just going to stay a little bit longer, in our apartment, whatever, and then try to save up some more money. So then hopefully, we can buy maybe next year, whatever the case is. But at the same time, it's also kind of scary because, a lot of these landlords, they're now raising rent so high. So like if you have a family, maybe you're staying in a 2-3 bedroom, most places, at least up here in Illinois, you're paying for 2-bed, $1,400, for a 3-bed, probably like, depending how modern it is. That's a lot of time what it has to do with too, how modern things are, but you're probably paying like $1,700 to $1,800 easily. So, it could get to be kind of crazy after a period of time, but let's just kind of read through some of the article. So it's saying the average interest rate on America's most popular home loan hit a 14-year high this week. Pricing out even more would-be buyers amid a double whammy of high home prices and surging borrowing costs. So in quotes, the monthly payment that people have to shell out to buy the home is just unaffordable. Mark Zandi, chief economics with Moody's Analytics, said on the Plain English podcast. Many potential first home buyers are now literally locked out of the housing market. And with this month's surprising high inflation reading, borrowing costs could climb even higher as the Federal Reserve plans more hikes. So 30-year fixed rate mortgage. The average rate on a 30-year fixed mortgage hits 6.02% this week, up from 5.89% a week earlier and more than double what it was 1 year ago. Mortgage finance giant Freddie Mac reported on Thursday. Mortgage rates continue to rise alongside hotter than expected inflation numbers this week, exceeding 6% for the first time since late 2008. So, we kind of can already see right here that, inflation, and that's what they're using. They're trying to raise the interest rates to hopefully help with inflation. The problem is that the interest rates are going up, but home prices are still too high. So it doesn't really help when it comes to like people's monthly payments. Like you might get a $300,000 home and 300,000, maybe even 200,000, you might be paying $2,000. And then some people say, oh, well, you should just go get an FHA loan where you only have to put down 3.5%. Well, that's cool. You could do that. But the problem is that with that, you have to pay insurance because you didn't put down 20% like with the conventional way. So you end up paying more money. And it's like the insurance is like, depending how much you put down, you either have to pay on it for like halfway through, or you could refinance, but it has to get to a certain point. So overall, it still ends up being like this kind of bad thing people are in. But then at the same time, if inflation keeps going up and you're still renting somewhere, that also means that your rent's going to keep going up. So at some point, if they don't kind of cool down with stuff, people are going to be paying more to rent than they are to own a home. That's essentially what's going to happen. And people are going to honestly end up being on the streets. I mean, that seemed like where we're going. So although the increase in rates will continue to dampen demand and put downward pressure on home prices, inventory remains inadequate. This indicates that while home price declines will likely continue, they should not be large. So they got the 15-year fixed rate mortgage. The interest rate on 15-year fixed rate mortgage averaged 5.21 this week, up from 5.16 last week. So, I mean, as you can see, another dip in mortgage applications. Last week, mortgage applications fell 1.2% from the previous week. According to the latest survey, the decline was led by applications to refinance existing loans, which fell 4% from the previous week and were 83% lower than the same week last year. So as you can see, like people are like, hey, this is pushing us out. This is what's making it so we cannot afford to go buy a home. And with the possible housing market crash, honestly, I feel like right now is not even a good time to be talking about getting a home really right now at this point. I feel like people should just try to save, see how things go, because it's like if you're buying right now, you're also buying at the tippity top. So I feel like if you could wait a little bit and see how low prices go, and also if there is a housing market crash like 2007, 2008, a lot of people are going to be in for a big surprise, because if the housing market crashes, a lot of people are going to be losing their jobs. And we're for sure going to be in a recession, which I already think we kind of low-key already are, but you guys kind of get what I'm saying. So, yeah, I just wanted to share this video with you guys, share this article. Let me know your guys' thoughts about this down below in the comment section. So if you enjoyed the video, be sure to drop a like, comment, share, and subscribe. Hope you guys have a good rest of your day, and I'll chat with you later. Peace.